Hello, and welcome back to Coin Lady channel. The SEC has never been so dishonest in a filing. It's saying something that they routinely engage in such absurd behavior as described in the article's title, CoinDesk. The SEC has pushed back against an earlier submission by Coinbase, which contended that the regulator did not have adequate authority to initiate an action, alleging that Coinbase had prior knowledge that it may have been breaching the law. The argument that cryptos are not securities, then, is nothing new. There should be no legal basis for the SEC to interfere with secondary market exchanges. This is a really compelling legal argument. The SEC is urging Coinbase to disclose potential threats to investors in public filings. If a threat exists, the SEC says, Coinbase must explain it. In addition, we can see that Coinbase listed the possibility that investor assets could be classified as securities as a risk factor in the company's public filing. Given the absence of any standards or criteria, it should come as no surprise that investors are confused about whether or not Ethereum is a securities or XRP or anything else. The SEC spends us and says these actions clearly show that Coinbase understood the security laws could apply to its conduct and knew which rules to consider in evaluating the legality of its conduct, but nonetheless made the calculated decision to take on risk in the name of growing its business, so they have to tell people. This is the deal, though. Did we realize the SEC might try to assert the craziest things about some items being securities? Could we, whittle down that list and try to guess what they're going to call? What about the ADA token, though? No way, no how. What might Matic's name be? We can't predict what issues they'll have because there is no means to test for them or implement any sort of method. And they have no right to rule over this area. The SEC is notorious for making an issue out of nothing. And unfortunately, the courts allow this nonsense, as we saw in the library case, where, when we look at all the guidance we have in the Hindman species that have utility is a decentralized, okay, you're in the clear, not so fast, we got you, and the judge rubber stamps that, so hopefully, with the money that Ripple has at Coinbase has even that Binance has, they can push back here and we get a slightly better result. The fact that Coinbase denied that an asset was a security did not mean that they were unaware of any asset's potential for loss. And this is where we could use some solid direction. That way, as US investors, we can make purchases with confidence that everything is up to code. Of course, the SEC is not going to let that happen just now. Currently, JP Morgan has announced, hey, you know what, we're getting a Bitcoin ETF? It's probably not that big of a deal. After surveying overseas markets and finding relatively little movement, they concluded that conditions were likely similar in the United States. If the S&P accepts a Bitcoin exchange-traded fund, ETF, it may be one of the greatest launches in history. Within weeks, $10 billion in value might move from GBTC alone into the ETF, not to mention the value of ETFs in other countries, such as Canada. And it is possible that many additional crypto offers may stream in as well. Now, what I would say is that I wouldn't look at the time where a Bitcoin ETF gets approved as though it were the beginning of the end, and that it was immediately going to go to the moon. So it's simpler for your huge money to start flowing in here as we enter a period of rapid expansion. Investors will need time to learn about and adjust to this new asset class, just like they did with any other. As a result, the sector can expand at a quicker rate, and you can predict with greater accuracy the proportion of their portfolio they will devote to it. Once we've established a system for categorizing altcoins, the largest ones will also have exchange-traded funds, ETFs. Again, the US market has a hunger for this BlackRock integrity, and your strong hitters, the ones who really know what they're doing, understand this, so the floodgates are about to open for a whole new class of investors here. For this reason, many are flocking to the area in an effort to beat the competition to the Dorthan ETF. They're aware of how significant it is. That's why they're not going to bother with it, it's a waste of their time. It's not because cynical investors can just shrug it off like JP Morgan did. It's a really big thing. You can bank on that. Here we are again with what to expect, this time with Matt Hamilton offering some insight. Who knows if Expector has a genuine grievance here, but know there's been some turbulence behind the scenes. Perhaps Ripple can refine their processes, and perhaps the foundation should provide more guidance on how the money is allocated. Or they can just improve their own, mechanisms here for picking proper funding, and I really hope they pay more attention to individuals who do infrastructure than just flashy initiatives that might move tokens. So, let's come back around to this. You can learn more about the topic by reading Matt Hamilton's take on it. Mrs. Rabbit was also mentioned briefly in that thread. However, in general, we need a lot more people to pay care to our infrastructure, such as those that run full history nodes. Obviously, this isn't the most riveting topic, but it bears mentioning because of its significance. As a last piece, we have this piece on Polkadot versus Cardano, which compares the two cryptocurrencies and their respective developer communities. Right now, the top three are Polkadot, Kosamba, and Cardano. That it's ranked third in terms of progress is crucial. In spite of the market downturn, we hope to see construction continuing. Does the fact that there are 3 dots in Polkadot and only 1 in Cardano really matter? Neither of these biomes should be overlooked, in my opinion. Also, you should have some stake in the projects that are being developed on top of Polkadot and Cardano. That's a layer you'll want to add to your portfolio. These two formidable foes stand a decent chance of permanently upsetting the Ethereum status quo. And even if they don't, the feedback will still be positive. And I anticipate both of those networks to be quite useful. This is what you should seek out during economically challenging times. Whoever is saying this is a short-term deal knows better. Even though Polkadot is very compelling on its own, I think Cardano might be more ready for the present because I prefer the way they build and they are able to improve and stack stuff on top without having to do redesigns. But I will say that this Polkadot seems like it's gonna go through a more wild redesign here. And if they are successful in doing what Dr. Gavin Wood is proposing, that network looks promising as well. Just keep an eye on these two powerhouses and all the tokens that have been piled on top of them. Please share your thoughts on the potential winners of these two blockchains in the comments section. Thank you, as usual, for your likes and subscriptions. See you later, bye.